Welcome back to Investing Talk Podcast.
Today, we're looking at AST SpaceMobile.
As usual, before we start, subscribe, like, and comment to this video to support the show, and make sure you don't miss our next breakdown.
And you are definitely going to want to pay attention to this one. We aren't just looking at a ticker symbol today. We are looking at what might be the single most explosive, let's call it a binary event, in the entire stock market for 2026.
A binary event.
Yeah.
Okay, so that usually means it either, goes to the moon or goes to zero.
Exactly. Very little in between.
Right.
The stock is already up 62% just since January 1st. And if you zoom out to the last 12 months, we're looking at a 400% gain. It's the stock everyone is talking about.
400%.
Yeah.
That's the kind of number that it makes me nervous. When something flies that high that fast, it feels like it's priced for just absolute perfection.
It is. You're right to be nervous. It is priced for perfection. But the reason for this frenzy is the promise. We are talking about true direct-to-device connectivity.
We hear that buzzword a lot, connectivity. So what does that actually mean for the average person?
Okay, so picture this. You're driving through the middle of nowhere. No bars. Your music stops. Your maps freeze.
Been there.
We all have. AST's promise is that you never experience that again. Their satellites connect directly to the standard smartphone in your pocket.
So no special hardware, no dish on my roof.
Nothing. No dish, no bulky terminal, just broadband from space straight to your phone.
So they want to kill the dead zone.
Kill it completely. And if they pull this off, it fundamentally changes everything about global telecommunications.
That's a very big if, isn't it? So I guess the mission for today is to figure out if that, $137 price target is realistic, or if this is just a massive bubble waiting to pop.
That's the mission. Is this the future or just hype?
All right, well, a good story is one thing, but let's look at the hard numbers. Let's pivot to the fundamentals. You said the stock is flying, but does it have the earnings to back that up?
This is where it gets interesting. We just got the Q3 2025 results, and we are finally seeing an inflection point. Revenue hit $14.7 million.
13.7 million. For a company valued in the billions, that sounds like, that's nothing.
In absolute terms, yeah, it's small, but you have to look at the rate of change. That revenue is up 1,236% year over year.
Whoa, okay. 1,000% growth.
Yeah.
What was the starting point?
In Q3 2024, they barely scraped together 1.1 million.
Right. So it's a huge jump from a tiny base.
Exactly. It proves they are moving out of the science project phase. They're becoming a real business.
I get the growth story, but I'm a bottom line guy. What does the profit picture look like?
They're still losing money. Definitely. Loss per share was 45 cents for the quarter.
Ouch.
It is an improvement. The year before, they lost $1.10. But, and I know you're going to jump on this, they did miss consensus.
By how much?
Wall Street was hoping for a smaller loss, around 18 cents.
So they missed by more than double. That tells me they're burning cash way faster than the analysts expected. That's a red flag.
It is a burn, no doubt. But they have a safety net, a huge one. They closed Q3 with $1.2 billion in cash.
A billion. Okay, 1.2 billion, that changes the calculus a bit. That's a serious war chest.
It is. It gives them a runway of about 24 to 36 months. Even with their burn rate, they can survive without diluting shareholders.
That runway is crucial. But let's talk about the tech, because space is getting crowded. You've got Starlink, you've got Amazon's Project Kuiper. Why isn't AST just going to get crushed by that? What's their moat?
This is the part I think a lot of people miss. Starlink and Kuiper are amazing, don't get me wrong. But if you want Starlink, what do you have to do?
I have to buy a $500 dish, get on my roof, install it. It's a whole thing.
Exactly. It's a hardware business. You
Yeah.
need their terminal. AST is. It's like a plug-and-play solution. Their satellites are basically massive cell towers in space.
So the moat is that I, the consumer, do nothing.
You do nothing. And that's why the telecom giants, AT&T, Verizon, Vodafone, they're all backing AST. They've signed billion-dollar agreements to use them as their ultimate roaming partner.
So that's the key distinction. Starlink is trying to be the ISP. AST is trying to partner with the ISP.
Precisely. They aren't competing for your business. They're empowering the carrier. And if you look at the forward guidance, Deutsche Bank is projecting 40% EBITDA growth all the way through 2030.
40% EBITDA growth sustained for that long would be massive.
It would. But It all assumes they hit their launch targets.
A very big assumption. Okay, so that's the story. Let's pivot to the price action, because I'm looking at the chart, and it's telling a pretty wild story itself.
The momentum has been undeniable.
I'm looking here, early February 2026. The stock is hovering, what, $104 to $106? But last year was pretty flat, and then, boom, December 2024, it goes vertical. What happened?
That was the Bluebird 6 launch.
Bluebird 6.
It was the game changer. Before that, it was all test satellites. Bluebird 6 was the first next-gen commercial satellite. We're talking 10 times the capacity of the old models.
10 times the capacity.
Yes, and it proved that their phased array tech, which is this massive antenna that unfolds to the size of a tennis court in space.
Tennis court in space.
Yeah. And when that thing unfolded and started working, the market realized, oh, this isn't a PowerPoint anymore. This is real.
Okay, so that explains the breakout. But since then, it's just been drifting sideways, bouncing between 90 and 110. As a trader, that consolidation is interesting.
What's it signaling to you?
It usually means the big institutional players are stepping in. They're using that range to accumulate shares without spiking the price. They're building a floor.
And that floor sets the stage for the next leg up, right?
Right.
The technical models we're seeing predict a range of 106 up to maybe 147 for the rest of 2026.
So even after a 400% run, the charts are saying there's another 40% upside.
If the momentum holds, yes.
Okay, let's switch gears and talk about sentiment. Because momentum can change on a dime, and the indicators I'm seeing look like a total battleground.
It is. It's a classic split market.
I'm seeing data that shows 70% short-term bearish sentiment. So a huge chunk of the market is betting this thing's going to fall.
Right. You have the true believers versus the people who think it's a bubble.
And the headlines. I mean, one says Starlink is no match. The next one says priced for perfection, get out now. It's giving me whiplash.
That's where the opportunity is, though. Look at the analysts. You mentioned Deutsche Bank. Their analyst, Brian Kraft, just raised his price target from $81 all the way to $137.
That is a massive hike. He basically said, I was wrong. It's worth almost double.
Exactly. And his reason is key. He sees the 2026 launches as the de-risking event. The risk premium vanishes once those satellites are up and working.
But he's just one guy. When I look at the consensus of all 12 analysts, it's a total mess. 5 strong buys, 5 holds, 4 sells. And the average price target, it's around $73. Right.
The stock is trading over 100. So the average expert thinks it's overvalued by 30%.
That's a fair point. But you have to ask, do analysts lead the market or do they lag? I think the smart money, the fact they raised that $1.2 billion, suggests they are ignoring the average target. They're betting on the long-term vision.
Which brings us to the risks. Let's dig into the bear case, because with a valuation this stretched, any tiny crack can be fatal.
Okay, let's do it. What's risk number 1?
I call it the execution cliff. This is the single biggest danger. To offer that 24-hour service, they must launch 45 to 60 satellites by the end of this year.
That is the target, yes.
And we have a test coming up, like right now. They have 5 launches targeted by the end of March. That's next month.
It's right around the corner.
If they miss that, because of manufacturing, weather, anything, the stock could drop 20, maybe 30% instantly.
That is a valid concern. Space is hard. But they're using SpaceX. They're hitching a ride, not building their own rockets, which reduces some of that risk.
Yeah.
Okay, but that brings me to risk number 2, the valuation bubble. The price-to-sales ratio is over 5,000.
It's a robust number.
Robust. It's astronomical. They're valued at $40 billion with the revenue of a car dealership.
But you're looking at backward-looking sales. The total addressable market is 5.8 billion mobile subscribers. So everyone. Basically everyone. If they capture just a tiny fraction of that, the cash flow becomes billions overnight. Then a $40 billion valuation actually seems kind of cheap.
That's a lot of if doing some heavy lifting.
Yeah.
Which leads to the final risk, cash burn. That operating cash burn hit $136 million for the first 9 months of 2025.
Growth is expensive.
It is. And as they ramp up, that burn is going to accelerate. If they hit a delay, that 24-month runway shrinks to 12, fast. Then they have to sell more stock and dilute everyone.
Dilution is always a risk. But again, with $1.2 billion in the bank, they aren't desperate. Not yet.
Not today. Okay, so we've covered it all. The growth, the risks, the sentiment. Time for the verdict. Let's get off the fence.
The moment of truth.
What's your score? How do you rate AST SpaceMobile right now?
I've crunched the numbers, and I'm giving this a bullish score of 7.2 out of 10.
7.2. Okay, solid. Why not higher?
It's capped because of that execution risk we just talked about. I can't go higher until I see those satellites launch successfully. But the thesis is this. It's high risk, high reward. The moat is real. The tech works on normal phones. That's the killer app.
So it all comes down to the launches.
100%. If they hit the March milestones, that path to 137 becomes very clear.
Okay, so from a trading perspective, here's my take. My horizon is 6 to 12 months. Watch the Q4 earnings in late February and those March launches like a hawk.
What's the downside warning?
If they miss guidance or a rocket gets delayed, expect a drawdown to the $45 to $60 range. That's a nearly 50% haircut.
Brutal.
It would be.
Whoa.
But if they execute,
The upside is significant. You're looking at maybe 40% in the short term, and who knows over the next few years. This is for risk-tolerant investors who believe in that 2026 launch schedule.
it's the ultimate binary bet. Either a revolution in how we connect or a massive repricing event.
That's the beauty of it. The outcome is not going to be boring.
Definitely not. Well, that's our analysis of AST SpaceMobile. If you're holding it or just watching, let us know your price target in the comments. Are you on board for 137 or waiting for 45?
Yeah, I'm really curious to see what everyone thinks on this one.
Don't forget to subscribe, like, and comment. We'll see you in the next one.